MLDs, for those of you who are not aware, they are market-linked debentures, and they have become a very popular source of investments by high net worth and ultra high net worth investors, largely due to the fact that they offered capital gains benefits with indexation, long-term capital gains benefits with indexation. And they were so investors were getting were looking at much better post-tax yields by investing in MLDs than by investing in traditional bonds that had regular tax treatments. Now, in the budget, the finance minister has specifically spelled out the tax for MLDs, and the tax, they have effectively removed the long-term capital gains tax advantage of MLDs, and also made all the income from MLDs as a short-term capital gains. Hence, and this, they have not made it from a prospective, it's not prospective, the tax law, it's retrospective. So it's been investors who have bought into MLDs, assuming that they can avail of long-term capital gains tax, are now looking at that benefit gone, and they have to pay full short-term capital gains tax. This is effective from 1st of April 2023 for the assessment year 24-25. This very short window, and hence now with many investors who have actually bought into MLDs are now looking to sell them before 1st of April, and this has causing a lot of rise in yields in the bond market, especially this is largely in the non-institutional, more in the high net worth and ultra high net worth space, where MLDs have become very popular investments, largely pushed through by wealth managers. The government in one stroke has clearly taken off the tax benefits available on MLDs. Now, MLDs, because of its popularity, also attracted many issuers of MLDs across the rating spectrum, right from AAA to even BBB. And all MLDs had found a lot of favor with investors at different level of yields. So hence, many of these issuers who have been issuing a lot of MLDs to investors will now have to issue traditional bonds or go to other traditional sources of funding, as one avenue of funding is cut off from them. Now, this can again cause disruptions for issuers in the market who have been dependent on MLDs for their funding requirements, and clearly their cost of funds might go up. A lot of disruptions happening due to MLDs. This was expected by many in the budget, because clearly this was seen as a tax benefit, but that was not availed by other traditional fixed income instruments, and hence the government has come and plugged this loophole in the tax, which was expected, but the way it came about, there were many who had got caught by surprise. MLDs have been the one positive aspect of this MLDs is very clearly that since all the income is treated as short-term capital gains, if investors have any short-term capital losses, they can set off the gains against the loss in any financial year. But that really doesn't provide any kind of great solace to the market or the investors who have invested in MLDs. And there is, currently as we speak, there is a lot of selling pressure on the MLDs across the spectrum. We are seeing a lot of MLDs on offer in INR bonds platform as well. We have INR bonds has been very, very circumspect on the MLDs market, not really if clients on their own or financial advisors who are the main users of a platform, if they had any interest in MLDs, we had anyway shown whatever was offered on the MLD market. But in that sense, we always advised on the fact that it's a tax, this tax could be plugged, and and also the fact that because of the tax arbitrage available, many issuers were getting away with lower interest, lower interest than what they would have paid if they had issued a traditional bond. So in that sense, the risk or credit risk was also distorted a bit in terms of because of the tax. So all that will get sorted out. So couple of months of disruptions for the bond market as more MLDs come into the market, and when the yields are higher, then other borrowing also gets tough for issuers who are looking to raise funds at the end of the financial year. And with liquidity getting tight in the banking system towards the financial year end, there could be still cost of funds could be still very high for many issuers. So clearly there is a disruption. Uh, INR bonds, as usual, provides the full information, transparency, and price discovery, as well as the positives and negatives of each instrument to make sure that investors understand what they are investing in, and also making sure that the curation is pretty much there for investors to take the best investment decision for their portfolios. So if you're a financial advisor, clearly come into INR Bonds Partner Portal, check the best bonds available for investments for your clients, most information, use the INR Bonds own risk score to make sure that the risk of the bond is well judged, and take the investment decision and provide the best portal, best platform for your clients to transact in on bonds, which can giving them the best risk adjusted returns. So financial advisors, by coming into INR Bonds Partner Portal, can grow their fixed income assets uh, by providing the best solutions for their clients. And our app, QuickInvest by INR Bonds, provides the best curated list of bonds on offer with our own proprietary risk score, as well as the full information available for bonds. And advisors and investors can select from the curated list, given that the universe available in the market is pretty high. So it's much easier to take a decision from a curated list of bonds. Download the QuickInvest app now, and I leave you with the risk of bonds, which is that bonds carry interest rate risk, that is price risk. Prices can go up and down. The credit risk, so bonds are liable for default as well, and liquidity risk. So bonds may not be able to, investors may not be able to transact easily or sell bonds easily if the bond is not very liquid. So all these risks investors have to be aware of before they transact in bonds, and check with financial advisors. They are the best people to guide you. Thank you very much.